if you operate a consulting business, if your business is located in cities like New York, Philadelphia, LA, Detroit, or any other city that charges income tax for business profits, listen up, stay tuned. I'm going to talk about how you can be possibly well overpaying your taxes. All right. My name is Chris Campbell. I'm a practicing CPA, and I work with small and mid-sized businesses to help them pay the least amount of taxes possible while I'm keeping them out of jail. So today's topic is about state allocation of profits and income. So why that's important is because if you operate in a city that taxes income, in addition to state, one key to lowering that bill that you're going to have to pay to the city is making an effort to allocate your profits to other locales when possible. So for those of you who may not already know, or if you don't operate in these cities, there's a local income tax. So we're talking about cities like New York City, Philadelphia, I believe LA offers one. I believe Detroit offers one, but the two that I'm most familiar with is New York City and Philadelphia. So if you operate any sort of business that's located within the city limits, you pay a city income tax in addition to state and obviously federal tax. And one way that businesses can reduce that income when at all possible is to do their best to allocate their income to other locales when possible. So now this is something that is frequently practiced with folks that might be athletes, entertainers. Well, athletes for the most part aren't necessarily self-employed, but those that might be self-employed and have their businesses, entertainers fall into that, where you perform in different areas, different cities. You may be based out of a specific city, New York or Philly, but you perform in other cities, and in those instances, you have to allocate the income earned to those cities or particular states, right? So that's pretty straightforward. That's pretty well known. Plus, with folks that are entertainers, it is very common practice that you do that because it can easily be tracked. Your income can be easily tracked, especially if you're pretty well known, the more well known that you are. Then you go out on tour, auditors and states can easily find out where you were in a particular day, and that state can let you collect. So from those instances, those are pretty straightforward, pretty obvious to do. But I do see this missed a lot for operations where it might be a consultant or two, and they reside in one of these cities and they provide their expertise in whatever field that may be. So whether that be marketing, whether that be any sort of management or sort of technical consultant, but it ranges the whole gamut. I had come across this with a client of mine who does some medical consulting. And as I'm talking to this individual, they're based in New York City. And as I'm talking to them, they're indicating that they perform their services not only in New York City, but in a range of other states. And they conduct a number of workshops in other states, but they are based out of and live in New York City. And as I'm talking to them and seeing what they're doing, more and more I realize that there is an opportunity here where we can allocate as much income as possible to these other cities. Because one of the issues that we were concerned about, and I had discussed this in other videos as far as going the S corporation route, it's tough to do in cities like New York because New York City doesn't recognize S corporations. So there's a bit of delicate math that you have to play here to see when it makes sense or if it makes sense to even have an S corporation in New York City. However, if you go the route of really looking to allocate your income and doing your best and being quite meticulous about allocating that income, it could make more and more sense to do an S corporation as someone in New York City, because now you have more of your income that's not subject to that tax, right? Because the idea is when it's allocated to the other areas, you're limiting that city tax, right? If you're a New York City based consultant and 30% of your income is generated from workshops, consulting gigs that might be performed in other states, where you're actually going to other states, we can allocate 30% of that. That's 30% of taxes that you don't have to pay to New York City. Obviously, you'll still have to account for your New York State taxes, assuming that you're a resident there, but we avoid that city tax. So I notice many folks that are in smaller consultancies don't necessarily think about this and go the route of really trying to allocate, but the idea here is that you want to be very meticulous because there's a process, there's a formula, I should say, as far as how do you allocate that, right? So if you know that you made X amount of doing an event in this city, X amount in another city, this, that, and third, you want to be meticulous about any direct expenses that might have been assigned to a particular city as well. So the takeaway here is that you want to be meticulous about your expenses and have them being allocated to specific cities or areas if they are direct costs, if it's associated or direct with performing the services. But that's the big takeaway here, is that you do your best to allocate your income to different areas if you're in these city taxed areas. So again, New York, Philly, but any city that taxes on top of the state, do your best to allocate the income away from there. It'll save yourself the city's income taxes. So hopefully this was helpful. I didn't want to get too technical as far as how to do the allocations, but just know that's on the table for you. If you have questions or need assistance with that, please feel free to reach out to me, or if you have any other tax related questions, please feel free to reach out. I'm happy to help. All right. So that's all for now. And I'll talk to you in the next one. Take care.